Hello and welcome to FinextraTV. We're here at Money20 in Las Vegas. With me now is Junta Nakai from Databricks. Junta, thank you very much for taking the time out of the busy event to join us.
Thanks for having me.
Good to have you on. And I want to jump straight in there and talk off the back of your experience within the financial services industry. What are some of those big changes you've seen amongst data enterprise platforms, but also the technology? Let's start there.
Yeah, so if you kind of think about it, banks are the Saudi Arabia of data. They probably have the most data of anyone else. And we've seen this big transition over the past few years where CEOs, CDOs, CTOs are really starting to think about data as a core strategic asset. And when that sort of mind switch changes, it's all about how do we make the most of our data and enable our people to innovate, make business decisions, get timely insights using that data. And that's a really big shift that we've seen over the past few years.
Mm-hmm. All right, so thanks for setting the scene there. So I think there's no doubt that we've entered a recessionary environment. So I'm interested to hear about the role of data, but also artificial intelligence, machine learning, cloud, and the software there. So in ensuring that survival and the relevance of financial services.
So if you think about times of economic uncertainty or recession, those things tend to bring the future faster. So everything that you mentioned, cloud, data, machine learning, these are things that people think that 2-3 years from now, maybe it'll make a big impact, but I think the timeline has been really shortened especially in this period of economic volatility. And if you kind of think about data as a core strategic asset, you basically have to do three things, right? You have to aggregate that data, you have to analyze that data, and you have to put that data into action. And all those trends are going to be accelerated throughout a recessionary environment because you need data to make better decisions, pivot really quickly, and build a much more resilient and innovative company, in good times and bad.
All right, so in the good times and the bad, I know capital and scale have always been at the heart of companies and right at the top of the agenda, but how have you seen those agendas shift?
Yeah, I think it's been a pretty significant shift, actually. So if you think about any bank or an insurance company or any payments company over the past decade or 2 decades, the most important sources of advantage they had arguably came down to those two things, which are capital and scale. So how much money do I have and how many branches do I have if I was a retail bank? But if you think about it today, what makes a company successful, what is going to make them relevant, what's going to make them thrive in the future, I would argue it's two different things, not capital or scale. It's data and people. So if data is the oil of the 21st century, people are the employees, the talented people with the domain expertise and knowledge to be able to do stuff with that data, whether it be to reduce costs, innovate new things, or reduce churn if you're a retail company, retail banks. There are a lot of different use cases, but those two things, data and people, take utmost importance. And it's going to for the next few years.
All right, I hear you loud and clear, data and people. So where does collaboration between the fintechs and the incumbents come into that, and how can that ensure increased value and also better customer experience?
I think they make each other better. So there's about 17,000 financial technology companies in the world today, 17,000. And so if you look at all the unicorns in the world, about 20% of all unicorns are in financial services. So that means if you're a big incumbent bank, there's a lot of competition out there. Right? And if you're a financial technology company, there's a lot of big players that have tons of data and tons of customers. So I think they push each other and make themselves better. Again, the incumbents have lots of data. Maybe the new entrants have more ability to do stuff with that data. I think there's a very synergistic relationship between the two. And the foundational component of that is data again. So how do you collaborate with things like open banking in Europe? How do you bring data together? How do you enable other people to do it? How do you do machine learning on the massive reservoirs of data that you have? I think both of them are pushing each other, and that's why we're going to see a lot more innovation in financial services over the next decade than we have in the last 10 years.
And that's where Databricks comes into it, isn't it?
Absolutely.
So, Junta, thank you so much for sharing your insights today. I'll let you get back to the event, but thanks and look forward to catching up further down the line.
Thank you so much.